Hey everyone, Trader Tim, E-mini Mind. Today's Thursday, day after FOMC meeting announcement. It's the 27th of September 2018. And just like that, the markets take off and are pretty good again. Going into today, um, so yesterday here on the daily chart, the FOMC day, big body candle, big range. But going into today, my expectations were that it's going to be a pretty good day in terms of the technical trading, the ability for the market to adhere to proper retracements, and there'd be a lot of participation in the markets because people kind of have an answer to what's the Fed going to do and what's their general sentiment towards the markets. So if we look on the daily chart, today doesn't look very exciting. It ended up being an inside day. Yesterday we traded up to the short, and then you'll see that I've got the low from back at the beginning of the month on the 7th to highs drawn. We didn't quite pull back there yesterday, but we were pretty close. So we had a low to high drawn that traded very similarly back here. Didn't quite make it to the 50%, but we did trade to that negative 23% target. So I just continued that low to high, and the target there is a 29.65s. So starting off today, like I said, I was optimistic. I expected the market to be a lot better. And just in the first 15 minutes, we can see very good, clean strings of red and green bars, or black and white bars if you're on a different platform or have your charts set up that way. But in general, there was strings of trendingness in one direction and then strings of trendingness in the other direction, as opposed to constant back and forth, one bar up, one bar down, or two bars up and two bars down. So that kind of confirmed my optimism for the day. We did gap up a little bit, um, but really, in this first 15 minutes, when I looked at, okay, where are the highs and lows, and what is the general trend after that 15 minutes, we had begun trending higher. And so I simply drew from lows to highs, and we got a nice pullback to 29.1775s. Now, one question that I get a lot, let's say we draw a low to high retracement, and we pull back, but we don't quite make it to that retracement, or in this case, a 29.1650s would have given you a 29.1675 entry. Price touched that level, but chances are you didn't get filled, and chances are that if you're adhering to not trading in the first 15 minutes, we're 3 minutes shy of 15 minutes into the day. So then the question is, what do you do from here? I like to draw the full retracement if we don't trade at the 50, if we don't fill that 50, or if we're in the first 15 minutes of the day. Because if you think about it, 15 minutes is not a very long time. And, let's say you drew from this low to high. You could do that, and you could place your order at 19s and let the market come back down. But when you have a smaller setup like this, you risk the chance of getting stopped out. So one thing you can do if you're unsure, but you don't want to miss the pullback, you can take the 50 of the second setup and the 50 of the full and split the difference and call it a 29.18. Or you just take your chances and go with the full. But when you draw up a setup and it doesn't trade at the 50, and then you draw the second setup in that series, you do risk it coming all the way halfway back because we didn't get a full trade at that 50%. So there's a lot of traders who wanted to get in but didn't, and sometimes that makes the run up a little bit thin. And then when it does pull back, it makes a deeper pullback. So that's kind of how I trade these situations. If it's in the first 15 minutes, I'll take the full low to high, and that's just kind of a good rule of thumb to be able to get in. This was a textbook trade. If you weren't sure, let's say you drew the low to high and wanted to see if there was going to be a retracement. Once we pulled back, when you draw the opposing, we failed the opposing, and so the very next thing to do is draw the next long setup off of that bigger level, like so. Market pulls back and takes off. And so that was pretty much a textbook long, this being visible on the 15-minute chart. And then this small setup, the first setup after the 15. And then as we rip, taking a small profit at the negative 23, and then as the market rips like this, you can, in most cases, start trailing each candle's low. When we don't break the prior candle's high, I just leave my stop alone. And so, trailing highs or trailing lows like this until, in this case, up about 23s. And then, so if you've got multiple contracts, you can trail in multiple ways. If you've just got two contracts, then taking one off at the negative 23 and then starting to trail conservative, but in this case, there's no pullbacks, so switching to trailing each candle's low is a good strategy. If you've got, say, 3 or 4 contracts, you can start by taking one off at the negative 23, trailing each candle's low, and then that third contract you can be a little bit more conservative. You could come down and trail the 61.8 of the developing setup. In this case, since we ripped pretty quickly, you could draw highs to highs and trail that 61.8. But what it does is allows you to have at least one contract in the trade. Market pulls back, you've taken profit, but then when it rips again, when we start moving higher, you're already in the trade. And then, pull back, makes a new high, you just start trailing your stop up underneath these swing lows, and then you catch another, couple of points. Market came down and broke this swing low by just a tick, but hey, it's another couple points, and you don't have to put on a new trade of risk. Another question I get a lot is, so you have this situation, you've got higher low, higher low, higher low, boom, we break the prior candle's low. Is this a short? Well, we come back and we continue drawing swing low to high. Market trades at the long, trades at the negative 23% target. We pull back and we break this swing low. But what I want to do is draw the next retracement. And if we trade at the long first, then no, it is not a short. I also like to come over to the tick chart and just make sure that we don't have a high tick that lines up with the high price. And today we did not. We had a lot of high ticks just prior to a couple minutes before making a high price. So that was a good sign that we were likely to continue to make highs. But you just want to make sure that if the long is trading first, then I pass on the short. So a couple of answers to some common questions that I get in the markets here. We ended up kind of selling off in sort of a reverse V pattern today, straight up, straight down, closing near the open. But good trading in the first couple of hours, and that's really all I care about. After 2, maybe 3 hours, I'm pretty much done for the day. So ES starting to look really good. We'll see what tomorrow brings. Now we are in between two 50s. We have a short 50% retracement and a long 50% retracement. And this can be a challenging area, but I don't expect us to stay in this area. What do we have? 2932s and a 2905s. I don't expect us to stay there for too long. So even if we do tomorrow, if we stay within these two range, 30-point range, I would expect next week that we either break above or below, and then start getting some follow through and some continual trending, and things should be really good. So if you have questions, as always, you can shoot me an email, tim@eminimind.com, and you can tune into the live trading room on Tuesdays. That's at eminimind.com/VIP. Thanks everyone, and have a great weekend.